Everyone. I'm happy to be here today, and I admit that this is my first time experience in such a setup, so please be kind with me, keep your eyes on me, and make sure that you have at least 2 or 3 questions for me, either now or during the breaks. I'm a tax consultant, and I'm so happy that I didn't kick off this event, because I would have given the impression that the event would have been so boring compared to what all the other speakers presented today. So I'll try to start my presentation by sharing a personal experience, because the organizers said you should be here to talk about money, to talk about the current macroeconomic and about the current environment conditions in an entertaining and funny way. Now, being a tax consultant, if you worked with tax consultants, you should know that tax consultants usually say, it depends. They never say yes or no. And after that, they work a lot with the Excels. So I paid a lot of attention to Victor mainly, because compared to me, he's an artist, he's a philosopher, he's a creator. And I will go back to the office, to my Excel files, in a creative and inspiring way before getting into the topics that I prepared for you today. So, without further ado, I would like to address you a direct question. I'm curious, what is your real-life inflation perception factor? Namely, when you wake up in the morning, how do you know if inflation is high, or if there is any inflation? What do you look at? There is no right or wrong answer, and you shouldn't have more. You shouldn't be more nervous than I am. So just shoot anything that goes through your mind. Great. Something else. What? Bills. Bills for energy bills? Energy. Okay. Something else. Okay. Aha, if you're a coffee drinker, yeah, this would be a good indicator. Victor said something about cars. Do you look at cars? Yes. Yeah. Then thank you very much for your answers, and I'll share my experience, which is a very recent one, with a potential client born in the Dominicans, probably with the US citizenship, living in London today, and I don't know where he would live tomorrow. And he said, I've been looking at Romania for lots of years. I've been studying Romania intensely for the last 2 or 3 years, and now I decided to come here and invest. I said, why Romania, if you're so worldwide, you have such a worldwide presence? Because it grows. How come? We are very close to the Ukraine. There is this ongoing potential nuclear pressure. No, but what is good for business? Okay, then I started to think of something else. But what about prices? You're an investor, you should buy something. Again, inflation is good. And I said, how do you know if there's inflation out there? Well, look at me, and he's a very talkative and communicative person, looking at what he drinks and eats. And he said, I drink a Coke every day. And if I study the price for a Coke can for the last 30 days, I noticed a 30% increase of the price. So I thought, let's introduce for today's event not another Big Mac index, but use Coca-Cola as an indicator for how inflation could be perceived. And I found that in 2015, in North America, a can of Coke was worthwhile $1. Today, it's 2.5, so it's doubled. This is how people in the streets would know that there is inflation. However, the reason for which I'm talking about inflation is that, and this is where the boring stuff starts, we see lots of crises around the world. And I thought that it might be helpful if we looked at the macroeconomic context to understand what's happening to us, and if there's something good that we could do with the current conditions and make them work to our interests. And today, everybody's talking about macroeconomics. I'm a tax advisor. This isn't what I regularly do, so I wanted to make this stringent and rigid topic more interesting. So I started with the US. Of course, I don't have any preference for the US, but the US is big enough to always have something to say about it. So from a macroeconomic perspective, US contracted its labor productivity by 2.4% year on year. This is bad news because this is a record pace in the post-World War II period. If we talk about US, we cannot leave China aside. And recently, the Biden administration took some decisions which controlled the US exports, and the immediate impact was with reference to the China's industry, chip industry. And what happened, in fact? All Americans, top executives working in China were given a choice. You either leave your job or you lose your US citizenship. And what happened? The next day, they all resigned. And this had a huge impact on the Chinese chip industry because they lost the know-how for production. So an immediate US decision generated a crash on the Chinese production market. If we come closer to our geography and we look at the Eurozone, the inflation grew in Eurozone by 9.1% year on year. And it is expected to grow given the dependencies that we have to the Russian oil and gas imports. I cannot leave this room without saying something about the UK. It's closer to the Eurozone, and that's why I didn't want to make a separate category for the UK, but what has been happening in the UK for the last 2 weeks is another bubble that must be mentioned in any macroeconomic related discussion, because there were lots of tax cuts decisions, which in the end crashed the capital markets, crashed the pound, and after almost 1 month, the finance minister was convinced to resign. And the impact of these decisions costed the UK, if I'm not mistaken, 32 billion pounds. Now, let's talk about Romania, since I mentioned all these big numbers. Romania is growing, as my client was telling me, but in the long run, it seems that this growth pattern takes place on a decelerating, has a decelerating slope, because I have here the numbers issued as at the end of August 2022, and the analysis of the macroeconomic department of a large Romanian bank say that we have a 5.8% year-on-year growth in Romania for the first half, and for the following 3 years, the expectation is to have 4.4% for the entire 2022, 2.4% in the following years in 2023, and last 4.6%. The inflation in Romania has also peaked. It leveled 15%. This means that your car or your can of Coke or whatever reference that you've had so far is already 15% more expensive. And if we face all these crises from a geopolitical perspective, from a social perspective, from an economic perspective, the impact will be seen immediately in how much it costs, namely in the increased financing rate. And since we're at a real estate event, I thought that a parallel between the way in which people finance their acquisition in the past and the way in which they would finance their acquisitions today would be an element for you to think of the investment products that my fellow colleagues will present after my presentation. So we've been living an extended period of low interest rates, and this was the incentive for attractive, cheaper financing and for performing more and more acquisitions. The end result was seen in the value of the asset prices. However, the time for the why not take a loan today has ceased, or at least has been suspended, because financing is more expensive. Investments in what was perceived so far as risk-free, like government bonds, are not as interesting as they used to, because if we look at Romania, for example, the annual average rate of the 10-year yields are getting higher. The latest issue shows a 9.33%. In the UK, the borrowing costs on the 30-year gilts, considering the latest decisions taken by the Finance Ministry to modify the tax policies and offer increased tax incentives, had an adverse impact on the yields, which took them down by 40 basis points, namely from 4.77% to 4.37%. So if I step back and I see that there is inflation, everything is much more expensive, financing is not so affordable anymore, or it's not affordable at all, the obvious question would be, what can I do next? Are there any proxies? Do I have any other realistically available options? And I would say, yes, we have real estate. Not in Romania, but outside Romania, in Luxembourg, for example, or in Ireland, we have real estate investment trusts, which are regulated and developed specifically for real estate investments. We have hedging funds, funds of funds. I think that real estate is something that you should consider before saying that inflation is bad. And now going to the real estate market context, localized in Romania, I will try to make it less boring by presenting what's hot and what's not hot. And I looked at all possible sectors. Logistics, residential, office, and tourism/hospitality. Developers and market analysts sustain that the industrial and residential sector remain the most competitive. And if you ask investors, I think that they tend to agree, if we look at what they buy. On the residential side, despite the increasing financing rates, it seems that residential is still heating. However, something that we should look at and put more emphasis on is that on the residential side, the leasing part could be more attractive in this high inflationary period. I will leave aside the office sector because due to the pandemics, the office doesn't work necessarily for the developers, but rather for the tenants. And I would like to close the presentation of the real estate market overview with with two main points on the tourism trends that we should look at. the fact that the return of business and the return of the international travel generated a new concept, which analysts called it bleisure. You know that when you book your room on Booking or whatever platform that you use, you're asked, is it for business or pleasure? I think that they should develop a third section for bleisure. And the second key point here is that getting back to business as usual might be something that investors in the tourism/hospitality sector could work on in order to increase their rates. And now, I've been telling you and asking this question, is inflation good or bad in real estate? Well, it depends who you're asking, the buyer or the user, because real estate has been used, and the economic theory says that it's a great hedging tool against inflation. In some ways, the financial moment that we are living today resembles what happened in the 70s in the US, because we had then high rates of inflation, strong wage growth, and falling asset prices. But work started to pay less at that point in time, and the ownership started to pay more. So, while researching for this event, I discovered a very recently concept called asset economy. This is from a book that was written in 2020. And this concept says that prosperity is determined not by what you earn, by the salary that you receive on a daily basis, but by what you own. And a significant characteristic of the asset is its temporality. And the authors of this concept state that it requires an upfront investment, which could be performed either based on own cash or based on borrowed funds. And it means that it generates returns over a particular time frame. And why I find it important and inspiring to present you this asset concept today, because there is an ideological balance of an asset-based economy, because investment in assets, and when I'm saying assets, I'm thinking of houses, expresses optimism for the future. And that's how, as a consultant, I turned the 15% inflation into into giving an optimistic message. Now, this is time to draw some conclusions, and if I want you to leave this event with 3 ideas, I think that the first thing that you should, I recommend thinking about, is that we see more functions and more types of real estate investments nowadays. These are a creation of the world and economic conditions that we are facing. We see branded residencies, we see shared ownership. Second, work pays more and ownership, work pays less, as opposed to ownership, which starts to pay more. And third, and lastly, there is an ideological balance of an asset-based economy, which in simpler terms might mean buy to invest rather than buy to live in. Thank you very much. I will invite my colleagues to tell you more about these conclusions that I draw.
Thank you, Diana. Just one more thing.
Yes.
You presented a solution for financing an asset like a shared residence, a branded residence, with funds, hedges, and all sorts of instruments. Do you share this, once you go to find the money there, do you share the property with these funds? What's the mechanism? Are they part of your property, or just another form of lending you money?
Yeah, this is a $1 million question, because this concept, which is so popular in the US and outside for lots of years, is going to be introduced here on the Romanian market. And in my personal view, let's say, I would see it as a split of ownership, but the fact that there is a hybrid nature between hospitality and residential ownership on one side, usage on the other side, and the callback of the property after a certain period of time, I think that based on this, there are so many valencies that should be considered not only from a legal perspective, but also from a tax perspective, to be able to tell you if the answer is A or B. So as a true consultant, I would say that it depends, and that I really need to look at the legal and tax conditions before answering.
And it's important that you bring back the word tax into discussion, because we're talking about financing, inflation, but tax is what property bears after year. So we need to consider that too.
We shouldn't have any taxes on financing because these are
True.
exempt. But if we have a real estate component, where there's real estate, there is a VAT, and where we have a structured investment product, I think that this is something that we should all ask and make sure that we have a good lawyer and a good consultant to help.
Diana will be here for your questions throughout the day. So thank you for now.
Thank you.
Thank you. And